you're prepared to break the silence, I'll be out in the sunshine, running beside the lions. I've been feeling down, but I've been looking up.
Hello, welcome back to WINFXTRADING YouTube channel, the only channel that is optimized to make you rich trading the forex synthetic market. I don't upload video anyhow, but if I notice a lot of traders are losing money and they are actually quitting, and maybe they're about to get to their success point, but they needed what it takes, and that is why WINFXTRADING is here. A lot of people don't know that joining VIP will actually rescue them from losing, because somebody is dedicated himself or herself to releasing those signals, and with highest accuracy as high as 100%. So today we shall be discussing about okay, before I continue, if you have not subscribed to this channel, turn the bell notification and try your best to subscribe. Try to share and like and refer your network so YouTube pushes to a high level of audience. So we shall be discussing how to trade with at least 0.01 loss on Boomcrash indices. You know, a lot of people are losing money on Boomcrash indices simply because of the rate of spiking is actually greater than the rate of direction, and due to wrong entries or wrong trade, the spike can work against you or work for you. So most of the times a lot of margin calls are received from small accounts due to the spiking or due to the direction maybe going in high momentum against your forecast. And how do we control this? Is by using a lot of 0.01. Maybe you know where the market is going. Yes, we know. Well, if you use some big lot sizes, like 0.2 or higher, it might lead to margin call because of price moving so far against your prediction or forecast. So I'm going to take you to chart to show you how this will work. But before I continue, we are actually enrolling people for Boomcrash Millionaire course, where we guide you one-on-one and tell you the secret, the main thing you need to know, and not free videos or content, but a premium success $1 million driven content that actually change your life overnight. You get the lifestyle, you get the discipleship skills, and the skill sets are not verbatins or one indicator to multi-level strategies. No, we actually tell you a few things which are the key to success, the key to open the door to your financial freedom. You need to start taking action. Okay, I'll go to chart and show you something. If you look at cash at 1000 on daily time frame, what are you seeing there? The market has broken these supports. It's actually, if you check well, you notice that something is happening in this market when we actually do some respected zone here where price jump up. We see like it has not actually broken, but it might be broken soon. I don't know, but I see a probability of price retesting this level and then gradually make some market structure like a kind of falling triangle, descending triangle like this, and then breakouts, and that will be modeled by something like this. Then when you break out this level, this zone, this price actions will come up and expect crash 1000 to test 6000 price. Well, that is not what I'm trying to say, but okay, you can take the risk. You can take the risk, by the way. Let me show you why you should take the risk. I wanted to buy because I'm expecting it to quickly, maybe by tomorrow or next tomorrow, come up here, then I will close. Okay, and that will be about 150 pip plus. But what you should know here is whatever you want to do, whether you buy or you sell. If you are selling, we're actually targeting a price of 6,000. That means you are going to make over 6,000 pips. If cash 1,000 hit the price of 6,000, which we believe is going to happen because Deriv actually push price so seriously that if they determine to reduce price, they are going to do that. Just like Volatility 300, 1S actually hit the price of $10 from a maximum price around 15,000 plus. Even this Volatility 201S actually was driven all the way from the same around 11 to 15,000 plus, and then downwards to now is revolving between 300 to 200. Only God knows where it's going to end. But that is it. I've already said this in one of my videos about potential theory or point theory. Maybe I have not done official video on point theory, but I have used it on path continuity, reversal, path continuity theory, and all of that. Maybe it's one of those theory I formulated in most of my free content. But I know potential theory is actually working actively in synthetic market, because that is where psychology kills traders. The broker psychology work against your own psychology, so that the resultant effect is in the direction of broker. Why you actually believe something but you trade it, you still see it losing, why brokers are actually getting more money and you are taking the losses? Because their psychology is unseen and unknown, but we are developing theories to decode their psychology. That's why you should enroll for my VIP signals, and that's cool, because what we produce in the signal is 100% no loss. So let's assume that I'm going to take the risk of allowing crash 1,000 to hit a price of 6,000. I have no option. What I need to do is, assuming I have $10 account, for instance, because this strategy of using 0.01 loss is for those with small account. Now, $10, if how many people we crash 1,000 sell for me to receive a margin call on $10 account? I think it has to go by 1,000 people. And if it goes by 1,000 people, it will test a price of 5,000 plus. Oh, so since I know that it will not even test that price, and if I'm going to sell, even if highest it will test this price before it starts selling, or it will test here before it will push down to prior to the price of 5,000. So how many people will I be risking in order to sell? I'll be risking about 500 plus people. And if I'm not going to receive margin call, what loss size am I going to use? I think I will use 0.01. If I use 0.01, then I will when price came to 7,200 plus, I'll be losing about $6. So I will not receive margin call. Then what happened? The spike we take my price back here. We take the price back here, and then the market will now break out, finally push down, react to the price of 5,000. Then you will be making close to $7. what it is, 0.01, or ability to convert, like to work against the minimum lot sizes of the broker. What it converts boom and crash to money printer or counter. But you need to understand what you're doing. You need to believe that the price is going to go in your direction. Let me show you what I mean. Maybe it seems that I'm talking something you didn't understand. If you go to daily time frame, you can get some strong signal. This is a kind of okay, let's assume, more crash, boom and crash markets spikes than it go in their default market direction. So this, assuming you get this signal, which is over 1000 pips, that is 1844 pips plus. If you get this signal, if you believe that this is going to happen using potential theory, that once price left here, once price left this point, price a particle is going to accelerate and never returns here, like it's going to hit that point and come here. If you believe that using potential theory, then you can just sell this market with 0.02, because that is a strong signal, or 0.03. Now remember the topic, at least it's not a must, it should be 0.01. So 0.03, once the market is reach here, you are making over $72 from $10 account. You're making $72, and that is your total equity will become 80 something dollars, and then you can be increasing your loss size gradually, maybe to 0.05 on next signal. Now what this thing does is that, assuming you entered here and this market went up to here, yes, it went up to here, you are going to be losing by, if you are using 0.02, you are going to be losing by only $2.47. You are going to be losing, if you use 0.02, you are going to be losing by close to $3. That means you still have $7 that will keep your trade running for infinity. Now what it is that the market will work against you, yes, but it will not drag your equity to 50%. It will not reduce your equity by 50%, meaning that if it is struggle, the highest loss you will expect will be less than 5%, no matter how you lose. Meaning that after all those losses saturate and turns to profit, you will never see loss again, because you know where the market is going. Then it becomes a money counter. Are you getting it? So once it hits your target, you close your deal. So that's cool. So what the question now is, how do you do this? You do it on all the market, both crash, both boom. You do it. What it is you are trying to work against the minimum lot size. That is it. Because why broker make the minimum lot size what it is to actually make you lose. But why I'm shooting the video is to make you actually take cash and boom to money printer or money counter, because I know what I've experienced this, like I've applied it, is working perfectly, but you need to know technical analysis. That's why you should enroll for boom and crash courses. You learn the boss method, $1 million method. It's not easy, all these things you people are trading. Okay, I'm going to go to crash 1000 again. We're going to sell, because I'm expecting the crash 1000 to react to 5000 and 6000. Not a must. Nothing is sure in markets. We use what we call a kind of commutation. We have a lot of mathematical equation to commutate the brokers manipulations. Then from there, the result we are seeing, we will use it in combination with some known strategies that really work and find the truth. You can't tell me it will sell or buy until it passes through certain algorithms. That is why you should join VIP, because I have some sense that this market keep selling because of the way it breaks this support level. So I'm going to put, normally if you have a small account from $10 or to $100, or just any account from $10 to $200 is a small account. I see that if you just want to sell 0.2, for instance, this is 0.2. What do you notice? You notice that if this spike didn't happen for about 3 hours, you'll be losing, isn't it? And assuming you have a $10 account, that will be so catastrophic. Okay, imagine this. If you go to 1 minute time frame, that every minute this is created 0.5 approximately. So if we can catch 0.5 pip every minute, 0.5 pip every minute times 0.2, then in a minute we are making 1 cent. Then if this run for 3 hours, we are making $18. But what we did is that we sold, we didn't buy. I get it. So if this market just buy for 3 hours, that means we are likely going to be losing by $18. So how do we control it? How to control it is to change 0.2 to 0.01, so that if the market buys for 3 hours, we are going to be losing only by $0.9. Or we can decide to use 0.2, then we are going to be losing by $1.8. We can decide to use 0.03, we are only losing by 2.7, and we can receive margin call, so we can actually put 0.4. We are still comfortable. We cannot receive margin call. So let's use this code, and see what you are going to do. You are going to come here, go to this place, open here, that is, click on it and hold on for some time, few seconds, and click on close, just hold on and then click on close. Don't close yet, go here and write, since you actually want to use 0.04, just look at what you're going to do. You just open another trade, put 0.24, just put the minimum lot size, and then add value to it. Then later you will subtract the value you understand what I mean. So you have 0.2, you are going to sell 0.24, you are going to sell. Let me close this one because it's not what I wanted to. Okay, good. Now you are going to go to close, then you are going to go to here, the lot size, just close 0.20, and then you will be left with 0.04. So you see it's running. That's good. You can do this on other assets. Let's open Boom 300 for instance. You can do this. Well, you need to understand the minimum lot size first. This market must retest this level before it maybe think about to change direction. It have to retest this level. It will even take it out if it likes, So we actually have a potential profit of 166p plus. Then what if this market can reach here or even here before it will start selling down here? Now, if the minimum lot size provided here is 0.1, so if you use 0.1, you are losing by $18 plus, and you have $10. I'm using $10 as basis of the equity. So what if you use 0.01? You only be losing by 1.8 or 0.02 by 3 point something, or 0.03 by 7 point something. So let's use 0.02. So you lose by $3.6. So here, you don't need to put stop loss. We can put take profit, but not stop loss, because the loss sizes manipulation using my strategy have eliminated losses and turned the Boomcrash to money printer, money counter, as I said before. So what you need to do here now is just open, the minimum is 0.1, just type 0.1 and then add, you are going to add something. You want to use 0.2, 0.02, then add 0.12. I get it. You're going to use 0.02, then you are going to sell. You're going to sell. Now, we shall click on the close here. You are going to remove 2 and then close 0.1. Then you are going to close. What do you notice? We are now having 0.02 running. Deriv will not penalize you. That's how it is done. If this actually run in my favor, it will run in my favor, because this is a price action. It's going to take out this low or become equal to this low. And that will give us, once you come here, we are making 2 by 1.7. That is let's call it $4. We are making $4. We're making $4, while risking 3 point something. Okay. There is no risk. You are just waiting for the profit to come. There's no risk. There's no loss. So it's a good system. The higher your equity, the more you can control it by reducing the loss size and number of positions you open. But at higher equity, you can decide to use some higher loss sizes, but then you still control it using this strategy. Take for instance, you have a $200, let's say $500 account, and you believe that this market will sell up to here, and place your TP here, that 159 pip. When you place your TP here, but there is tendency that it can went up to here before it will actually sell. So in order to avoid such problem, now to avoid staying away and saying you won't trade because you're afraid, why not use, since you have a $500 account, why not use 0.08. Why not use 0.08? If you use 0.08, you'll be risking 187 by 0.08. You'll be risking $14. This strategy will help binary trader. You will use the money it's not that you're making huge profit, but that money you can use it to trade drop. That's why you should enroll for drop course to learn how to trade drop. Use the money to trade drop. Like, you're actually targeting about 198 pip. The pip you survive, depending on how I calculate it here. 198 pip by 0.08. You are targeting $15. Now, when this money just come without suffering, because you just know where market is going. $15, when you get around $15, you can use it to start binary option trading, where you can take $1, like out of the $15, you use $1 to run it on rollover basis in 14 days. But you can decide to use $15, then the number of days to reach $11,000 plus will reduce. Maybe to reduce to 10 or to reduce to 8 days. I get it. Imagine you start with $15, and you roll over for a couple of 8 days. That would be $3,000 plus. And then if you roll over for 10 days, that would be $11,000 plus. So that's what we are saying. So what makes people quit trading is you don't know how to build wealth. Take cash and boom as money printer so that you can reinvest the money in other powerful as a trading product like binary and Forex or gold. Imagine $15 account you used to trade a short signal on gold can take that $15 to $300. Next day you double up to $600. Next day you double, like that. You become a story. You take $15. You take $10 to $15. Like you take $15 to a $10,000 trading gold. It's possible. It's all about learning. Like enroll for Forex courses. I render a lot of courses. Check down the description. You see them. If you are tired of learning, join VIP. Your life will change. There's not much to talk here. We don't brag. You see, we don't brag. Okay. You see this crash 300 or 500. The signal just came out this morning. See, it has reacted to $50 in profit, but it's still retracement. That retracement doesn't matter. It doesn't affect anything. It's going to sell. That's good. Very soon, instead of seeing this, you're going to see something like $100 plus per position or 200. Before you know it, it's going to sell massively. That's good. For the moment, it's going to sell at least today. I'll be ending this video. Try to apply this accurately. Thank you and bye for now.
If you're prepared to break the silence,